right now, investors everywhere are trying to figure out what to do next. Volatility is high, global tensions are rising, with conflicts in Iran, oil prices are surging. The noise is everywhere. And when the noise gets loud, that's when the most expensive mistakes happen. That's why having a clear process matters more than ever. Because in moments like this, it's easy to panic, follow the crowd, and get it all wrong in the stock market. But what if I told you that $100 into the right stocks right now could eventually outperform your full-time job? It won't happen overnight. It's not hype, but with the right strategy and the right opportunities, it is possible. In this video, I'm breaking it all down. The 3 stocks, the analysis and fundamentals behind those companies that say buy right now. We're pulling from morning. We're running every single one of these stocks through our own process to answer one question. Do the numbers actually hold up in a bear market to invest our money into these companies? Because at the end of the day, it doesn't matter who likes the stock. What matters is what you're buying and what's actually worth it. Everything else is just noise. But if you're here, this channel isn't about hype. It's about understanding the value and making confident decisions. Let's get into it so with that being said, let's get into the first stock. And one last thing before we jump into it, last thing before we dive into it, it would mean the absolute world to me if you can go ahead, click the like button, click the subscribe button if you're enjoying the video thus far. But let's jump into it. So how is this possible? How can $100 actually surpass your full-time job? Well, let's look at it. Now, why now matters more than ever, especially with the volatility in the market, the global conflicts with Iran impacting oil, and fear-driven markets that causes lots of mistakes. You might have remembered back in the day, 2020, when the whole world was on pause, people couldn't go to work, and the market absolutely tanked. Was that something wrong with Amazon, Apple? Absolutely not. It was external factors and external fear. Yes, there was going to be impacts to the revenue of that company, for sure. But was COVID going to last forever? Probably not. And when people started cluing into this, they realized, oh, this isn't a terrible time to buy. This is the best time to buy. 2008, when everything was collapsing, did it mean Amazon was bad and Apple was bad? Nope. It just meant that external factors within the housing markets were affecting the entire economy. And so all these different things have impacts on the companies. It doesn't necessarily mean it's a terrible time to buy. So here is the first one here, S&P Global, which is kind of a regulatory moat. So this runs on the S&P 500 index and credit ratings. This is the first company that we're going to be looking at, and I think this is a fantastic buying opportunity this week. I am personally buying some of this company, and you should consider looking at it too after we go through the research. So this has huge barriers to entry, which is important. If you think of, starting an Instagram or YouTube, there's very little barriers to entry, but a company like this takes massive backing, and it's the gold standard behind credit ratings. They have strong cash flow and steady profit margins. Analysts discounted it 21% so far. All right, so let's go ahead and look at it here. As you can see on the chart, massive volatility last week. I mean, just massive. But if we look down here at the earnings reports, hit earnings, and then just this last earnings, they missed earnings, which is why it was red. So we can see why there was a correction. Now, this doesn't mean that this is an absolutely awful company. No, it means right now is a fantastic buying opportunity for this company. Because look at the track record, absolutely fantastic. Going up nice and slowly, just consolidating at good levels of support. It reached about 480 back in 2022. And then recent highs were 565 before starting to peak down. Obviously, they missed earnings, so it's expected. Now, does this mean this company's going to evaporate? No, absolutely not. But it means that buying in this company now, just a fantastic support level here in the 430 range. Now, what I think is going to happen with this company, I think there's going to be a bit more of a consolidation period, might go up a little bit, might go down, but fantastic swing trading opportunity within the next couple of weeks and especially the next few days. This is a position too that a buy and hold would be a great situation. As you can see, it's just a slow cooker, just slow cooker, slowly but surely going up. And so as they miss their earnings, fantastic time to buy into this company. What is the next company? Let me ask you something real quick. How long have you been trying this whole trading thing on your own? Jumping from YouTube video to YouTube video, trying out different strategies, second guessing your entries, and honestly, never feeling confident when you click that buy button. Because I've been there too. And what I realized is this. Trading isn't hard because the market is confusing. It's hard because you don't have the right guidance, structure, and environment around you. That's exactly why I created Stocks with Johnny. And this isn't just another course, and it's definitely not a theory. This is a mentorship, a community where you're actually in the trenches with me. Live trading calls where you can literally watch me break down trades in real time and take them alongside you. Real-time trade alerts so you're never guessing what to do next. And over 10 hours of in-depth training where you can walk you through step-by-step through the exact strategies I use. So instead of trying to piece everything together yourself, you're following a proven system with real guidance in real time. Now, I want to be very clear about something. This is not for everyone. We only work with traders who already have at least $20,000 in portfolio. You may be asking, but why, Johnny? Because at that level, you're in a position where the right strategy and execution can actually start to make a meaningful impact. And I want to make sure we're working with people who are serious about this. If you're tired of guessing, if you want consistency, and if you want to be around other traders who actually are doing this at a high level, then the next step is simple. Book a call with my team in the first link in the description below. We'll talk about where you're at, where you want to go, and see if this is a good fit for what we're building. Do you qualify? We'll show you exactly how to get plugged in. And if not, that's totally fine. But either way, at least you'll finally have clarity on what the next move should be with your portfolio. Spots are limited. We keep this community tight for a reason. So even if you're thinking about it, don't wait. Go ahead and book the call and we'll see you on the inside. Company we're looking at, Amazon. Good old Amazon. As I put up here, big bets pay off. AWS powers AI infrastructure. Retail and advertising margins are improving. Analyst growth projections are very strong. And then there's also lots of free cash flow, heavy, but reinvested aggressively. Now, Amazon's been so good at this over the years, just constantly reinvesting. Even Amazon, the first 10 years that it was in business, it essentially just put a loss on there, even though it was making money. And so they're very good at reinvesting and growing properly. So with that being said, Amazon, I am currently putting some money into it. It's not a ton of money, granted. Amazon is one of my favorite positions, but I just don't see a massive amount of growth in it super quick like it had, as you can see here during the COVID period. Just absolutely spiked up. But what I do see is a little bit of consolidation and some good trading times within here. So as you can see, did really good on earnings over the past 7 and then missed that one earnings here. So surprise, 1% lower. So again, like this isn't anything crazy. Like they missed earnings, but it's nothing crazy. Now on a fantastic company like this though, because I think they've already gone through a massive growth period, obviously, buying at a level like this, maybe holding it, selling, and then getting back in and doing these little mini trades are a great way to actually compound your wealth. Especially if you're doing trades of 5,000 by the end of the week, you make 5,500, 5,600. You take out that, you reinvest your 600 profit, and you just continuously grow it like that. Mainly, I'm looking at the 4-hour chart for Amazon specifically to try to look for those good entries. As you can see here, there's a deep, dark candle wick downwards. And then you can see lots of different consolidation and buying within here. But that's a fantastic one. Let's move on to the next company. My last one to put lots of money into as much as you possibly can is Johnson & Johnson. I don't know why this company isn't covered more. They do have a high valuation, but man, what an absolute slow cooker this is. So if you're putting in your money and you're wanting to actually retire within the next few years and grow your wealth, instead of just putting your money in an AI position that literally might disappear tomorrow. Let's be honest. We have no idea what's happening with AI 1 week from now. Put it in a company that's actually had a great track record, fantastic products, fantastic revenue. So as you can see here, they're more of a cyclical, overpriced Apple, strong story behind it, but near peak valuations for some investors. So there's a little bit of worries on this. And I think this is a fantastic, let's see here, Johnson & Johnson. There we go. And the reason why I think it's so amazing to buy it now is because when there is fear, I mean, that is when we buy things. That's when we go for it. So as you can see here, a bit of overvaluation. What I would wait to do is I would wait till this pulls back just a tad. We're going to have a drop down here. And then I think we're going to see some really, really good run-ups as well. Let's see the earnings here. Let's see. Okay, so they did also miss earnings here. Let's see by how much? 0.1, so nothing crazy. But as you can see here, good surprise of 1.72. They hit the past 7 earnings though, so that's good news. And this is like really, really a strong buy for me over the coming weeks. especially once we hit a pullback, I'm jumping in 100% and getting in, because what a fantastic company to actually buy into. So if this is something where you're actually wanting to build up your portfolio and you're wondering, how do I find these companies? How do I find great companies to purchase and put my money into? It really starts at the fundamental level of the company, looking at those earnings sheets, making sure that they're in a positive direction. I'm not going to invest in a company that has had 2 missed earnings, because the sentiment over those companies isn't going to be as strong. Listen, I want to be on the winning team, and I'm sure you guys do too. I don't work hard for my money for it to be gambled in the market. I don't want to do that. And so I'm trying to go for as safe as trades as possible. And with these 3 trades, I think we have some extraordinary possibilities over the next few years. If you put in a small amount, to reap a great reward and really build your assets and your portfolio. Now, there is some caveats there, obviously. Like if you don't reinvest the earnings every week, it's going to be tough for your portfolio to build. But for most of you that watch this channel, I assume that's not your biggest problem. Like I said, I help people that have over $20,000 in portfolio. So as long as you have over $20,000 in portfolio, it really starts compounding quick. From there, we try to get it to 50,000 and 100,000 as quick as possible. But some members in our group, definitely more, are already over 100 grand. So with you guys, it's more just retaining your gains within the bear markets and really expanding during the bull markets. Many people don't have any issue expanding their portfolio during the actual bull markets, but it's the bear markets is when those tough times come. People have to really say like, okay, well, should I trim this position? What should I invest in? Am I putting too much of my portfolio in this position? Should I actually take profits? So these are all the questions that I normally get. So make sure, if this is you, book a call down below with my team, and we look forward to seeing if you qualify to work with us. But we'll see you guys on the next video. If you haven't already, make sure to click the subscribe button. It would absolutely make my day. Take care.